Thank you. The downside when you have some speakers before is that you don't know what they are gonna talk about, and sometimes they cover part of what you were planning to say. But I'll try to recover a couple of the key points that Stefano and them already made, and help and use them to articulate my point today. When we talk about climate finance and sustainable finance, it's very easy to get lost. It's a lot of different figures, not always consistent. Actually, we sometimes talk about sustainable finance or climate finance, and these are not the same thing. We talk about climate finance and we quickly go to the bond market, and bonds are just a relatively small part of it. We usually don't talk so much about green loans or other type of financing. A lot of people think about grants or soft financing, and that's actually not sustainable finance. It's a growing market. It's bigger and bigger, but it's still a small part of the finance sector. And as Ethan said, I mean, reporting is, well, it's not only more and more important, it's already mandatory. This could be, well, cumbersome in some way, but it definitely helps the rail sector and other kind of sustainable, let's say, sectors to strengthen its credentials. And in this respect, the taxonomy has been in Europe a game changer, because some of the criteria for some activities could be controversial, but at least we have a common set of rules for everyone. It's not so long ago that I saw investments in motorways labeled as green because, you know, the consumption per kilometer is a little bit better than with the old road and things like that. Now it's clear what is green and what is not. And for the rail sector, that's very beneficial because, well, the massive part of the investment in the rail sector are green, at least all the electric traction based. So we have more and more investors interested in green projects, and in the rail sector, we have a big investment gap. You will know from your respective countries the needs to to complete the TEN-T, to develop all the national strategic plans are huge. So in principle, it should be easy, right? But the reality is a little bit more complex. One thing is the eligibility or the policy objective. Well, yeah, the investors want green projects, but they also want their money back. And they will always look at the financial structure, bankability of the project, shareholder governance of the promoter, predictable cash flows and things like that. And if this is not bankable, and in the rail sector, with the private on a private basis is not always the case, they will never step into this market. It will always have to be the public sector. The public sector is more limited. The borrowing capacity of the private sector or the public sector might be more limited. And also we have to ensure, well, technical risk, environmental risk, and so on and so forth. So at the end, yes, there is a lot of money available, but it is more, the challenge is not in identifying the sources of money or the investors. The challenge is to have well-structured projects in the existing policy framework. And at this respect, and this is a little bit of what we are working on from the EIB. I mean, in the EIB, we have been working in the rail sector for, well, 50 or 60 years. We invest more than 4 billion euros per annum, traditionally with public clients, with private clients, rolling stock and infrastructure, also project finance. But under InvestEU, we have been working with the Commission to try to tackle an additional type of clients which are one notch below investment grade. Projects which have a viable business plan, and this is very important, a viable business plan, but that for a series of reasons, market barriers, interoperability, early mover, and things like that, are not bankable. And then this is a program which we call future mobility. The European Commission is providing a guarantee for the bank so that the bank can step into that project and approve financing for that project. And once the bank approves financing for a project, typically the terms of the bank are, well, attractive pricing and longer tenor, and in some way it can have a signaling effect to other investors, thus making the project even more bankable. So that's kind of the small contribution we are working on to try to expand a little bit of the range of instruments for clients, and thus grow in the rail sector. We have already approved one operation under this scheme for cargo beamer, which some of you may know, but we already have a couple of additional promoters that we are working in the rail sector.